Good morning. It's Friday, the 31st of January, and this is Govindraj Ethiraj, headquartered in broadcasting and streaming as always from Mumbai, India's financial capital, but today in transit. The take. India must equip its small businesses to fight in a deglobalizing world. Sometime during peak monsoon time last year, I happened to drive past Bajaj Auto's massive two-wheeler plant in Chakan near Pune. Now, drive may not be the right word since it was more of a long and slow crawl accompanied by frequent jolts up the spinal cord. We also passed the Mahindra SUV plant close by. It struck me once again that these were world-class factories producing world-class goods, exporting to the world, and yet getting product out of the gate and on its way within India or overseas would be a much greater challenge for them than their counterparts in other parts of the world. I was visiting a plastics original equipment manufacturer that supplies various parts to Tata Motors, among others, who are all quite close by in a relative way. They were supplying around Chakan too. When I asked the founder of that plastics company how they managed with such terrible roads, he shrugged as if to say, what can we do? We have to live with it. The founder of this plastics molding company lives with it because he can still produce and sell with a reasonable margin. But what if Trump's tariffs were to change that? Doing business in India, particularly for smaller companies, can be tough and goes beyond navigating bad roads. Smaller OEMs or original equipment manufacturers face continuous challenges of cash flow and margins, and some of this cannot be helped in a competitive market, but a lot of it is because of the physical environment they work in, including dealing with constant regulatory encounters. It's not like big companies don't face regulatory scrutiny beyond what they expect, but they can better manage them with dedicated teams. It is of critical importance to ensure that smaller enterprises are better cared for. This could mean easy access to finance or just a light touch regulatory environment and an honor system that does not punish recklessly. This is important because India's smaller enterprises, in this context automotive and engineering, have shown remarkable resilience and adaptability, like the move from electric or rather to electric and hybrid from pure fossil fuel-based vehicles. Whenever I've met or interviewed CEOs of large automotive components or even component companies, they've always highlighted the challenges of the firms that supply to them, even if their balance sheets were fine. Protecting resilient, mostly faceless enterprises and encouraging them should be a key area of focus in the government's industrial policy making, whether within a union budget that's being presented tomorrow or outside it. Here's one good reason. India's automotive exports continue to surprise. Latest figures show that Maruti Suzuki's share of exports has jumped from around 23% in 21 to about 41% in 22 and about 49% in the last quarter. This is of the whole passenger vehicle market. Export volumes were up about 38% in the last quarter for Maruti Suzuki, in contrast to the 8.7% in the domestic market, according to the Economic Times. The export revenue for the company is now running at an annualized figure of about 26,000 crores or 17% of its revenue. So, brokerages are now raising their export volume estimates for the coming years as they point to the continued weakness in the domestic market. So, Maruti, of course, is not the only big exporter. Bajaj Auto, the two-wheeler maker, their domestic sales, whose plant I also passed incidentally, declined 9% year-on-year in the last quarter. But its exports were up 22% year-on-year, thanks to countries like Africa or regions like Africa, Asia, and Latin America. A growing export base is of course most welcome and creates a cushion for car makers who represent a substantial percent of India's GDP to keep the factories running. But it's not just the Bajaj Autos or Maruti Suzukis who have to do well. Others do too. The automobile industry is a good example that has created a reasonably strong ecosystem and thus a moat to produce at scale for the domestic and export markets. And this ecosystem is the reason why India can produce quite competitively, and global brands like Hyundai and Suzuki are able to export in large numbers from India. Nourishing this ecosystem, whether in automotive or other industries, is equally critical, because even a small round of tariffs could change the game. Presently, it's the United States that we're worried about. But remember, we never expected it. There is a sense that we take success or growth for granted and assume that we can ignore the potholed roads of Chakan or the cumbersome goods and service tax processes because the bottom line numbers are, actually make that word, looking good. This is the time to roll up our sleeves further and start unclogging the pipes so that businesses small and large can become more competitive and productive and fight in a deglobalizing world. A potholed road that backs up trucks can make a much bigger difference than we think. And that brings us to our top stories for the day. A relief rally picks up some steam as some foreign portfolio investors return. Oil is stable as traders price in a US tariff on oil suppliers Canada and Mexico. An exciting new oil discovery on the other side of a river in Assam. Global air traffic officially overtakes pre-pandemic levels. And India could see above average temperatures in February affecting crops.
This is the Core Report with Govindraj Ethiraj.
A modest relief rally continued in the markets, with most traders saying that this is a reversal of an oversold market rather than a specific trend, though foreign portfolio investors appear to have returned in some ways, buying futures. The BSE Sensex and NSE Nifty extended their winning streak for the third day and session thanks to gains in oil and gas and financial stocks, while IT and auto stocks held back. The US Federal Reserve did not change rates, so the focus is now back to the union budget, that's tomorrow, and whether it'll shower any goodies on Saturday. And when I say goodies, the expectation is really tax relief in some way or the other. The Sensex was up about 227 points to close at 76,760, and the Nifty was up 86 points to close at 23,250. The indices are still down about 11% each from their record highs on September 27th, 2024. The BSE mid-cap and small-cap indices were flat. Meanwhile, Home Appliances maker Whirlpool of India said on Thursday its parent Whirlpool Corporation intends to reduce its stake in the company to about 20% this year via a market sale. And it also said that it expects to raise about $550 to $600 million from this transaction and hopes to close this by mid to late 2025, Reuters reported, adding that Whirlpool Corp has dues worth about $1.8 billion. Parent company currently has a 51% stake and last year sold a 24% stake for about $468 billion in a continuing bid to reduce debt for its parent company, even as it's rejigging its global assets, including folding its European business into a new firm and selling its Middle Eastern and African business. So the larger point is this. Companies are obviously, or promoters are obviously paring their stakes in recent years thanks to high stock prices here for both strategic and financial reasons, or a combination of both. So while we've seen foreign portfolio investors selling quite visibly, there are also instances like this where direct investors are also selling and making good use of the high prices and valuations. Oil prices on standby. The good thing is that markets price ahead. In this case, oil prices. They were mostly stable on Thursday as markets braced for the tariffs that US President Donald Trump threatened on Mexico and Canada, who are, by the way, the two largest suppliers of crude oil to the United States. Brent crude futures were down 7 cents at $76.51 a barrel. That's therefore under $77. So the tariffs will kick in on Saturday if they do. The US has said that Canada and Mexico can avoid the tariffs if they act swiftly to close their borders to fentanyl. Analysts told Reuters they do not expect a big impact on the oil markets from Trump's tariff promise, as traders have already priced in this possible move. Meanwhile, crude oil exports from Russia's western ports in February are likely to fall by 8% from the January plan, according to Reuters, as Moscow increases refining and thus consumes more of its own crude, and of course the US sanctions, which are dampening crude exports. Investors are also looking out for a ministerial meeting by the Organization of Petroleum Exporting Countries and its allies, which is called OPEC Plus, which is scheduled for February 3rd. Trump has publicly called on OPEC and its leading member Saudi Arabia to lower oil prices, saying that doing so would end the conflict in Ukraine. He has also set up an agenda of maximizing US oil and gas production, though analysts who Reuters spoke to believe a price war between the US and OPEC Plus is unlikely, as it would hurt both. And they also predict that Brent crude oil prices may go down below $50, as OPEC Plus can deploy over 5 million barrels per day in its spare capacity, which in turn would obviously force US shale oil production to come down. All of this is, of course, good news to India, for India, if it happens. An exciting new discovery on a riverbank. OIL, or Oil India Limited, is India's oldest oil venture, having discovered oil in 1889 in Assam in northeastern India. While there are some interesting oil discoveries now and then, the larger challenge is that India is not as endowed with natural oil resources as some other countries are. So all of that means harder work and occasionally some exciting finds, as well as I found out when I spoke with Dr. Ranjit Rath, chairman of Oil India Limited, and I asked him to walk us through some history and also back to now how oil is using, that's OIL, is using technology to explore more smartly and also to take us through one of its more recent finds.
Govind, first of all, thank you very much for having me today. It has been always a pleasure speaking with you, and I remember the brief interactions we had prior to last IEW. It was always encouraging to talk to you. Very right question to start, in fact. From an Oil India perspective, I will tell two things. One, we have recently established through a very, very persistent effort of sustained exploration approach, we have established hydrocarbon in the north bank of Brahmaputra. From a significance point of view, it is immense. All the Assam self-discoveries so far has happened in the southern bank of Brahmaputra, where Oil India operates its field. And it has been always a consistently effort to do seismic, to drilling. And only recently, we have established hydrocarbon in the north bank of Brahmaputra, which gives us two signals. One, there are more prospects to explore in the northern bank, where Oil India holds significant amount of open acreage licensing policy-driven acreages for exploration. And as a supplement, having established hydrocarbon, I'm not saying it's a discovery till we measure it and get it ratified by the government. But establishing hydrocarbon means we are supplementing it with immediate 3D seismic camping to establish the structure. This also opens up another area of interest. If you have hydrocarbons in the south bank of Brahmaputra in Assam itself, and you have now in north bank, very likely as the explorationist within me tells me that below the river of Brahmaputra, we would have hydrocarbons. Here, we are doing two things as far as the technology is concerned. We are adopting something called a multi-lateral well, where at one plinth, simultaneously, we will be able to operate 5 wells. That's one. Second, we are also planning to adopt something called extended reach drilling, under which about 3,000 to 3,500 meters below the river bed, with an S bend or a J bend, we will be able to target the hydrocarbon without drilling vertically. So these two things would actually open up more opportunities in terms of exploration and possible discoveries.
For those who perhaps will not know or may not know, there's a history to Oil India Limited and Assam and the first discovery of oil, which goes back obviously more than a century. So tell us about what you found now in the context of the history of Oil India and the oil that you...
This is very, very interesting question. It is in 1889, oil was discovered through a chance discovery in a place called Digboi, we all know, while the Britishers then were laying a railway line in the northeast part of northeast India in Assam to carry timber and coal from the northeastern coal fields to Dibrugarh to shell it through the Brahmaputra river. So while doing so, in near Digboi, the elephants which are putting the sleepers in the railway track, they got something interesting in their toenails, which was a black liquid. So the Britishers then decided to dig that location, and that's how the name Dig Boy Dig. So that's how Dig Boy came. And just to give you a context, then the first discovery happened sometime in October 1989, 135 years ago. So we can claim the legacy of Oil India being the one of the oldest E&P company in this part of the globe. Of course, it first was Assam Railway Trading Corporation, then it was Boma Oil, then it was a JV between Boma Oil and Government of India. And in 1980s, it became a national oil company. From a contextual point of view, the then discovery happened at a depth of about 186, 180 feet. So that's about 50 meters or so. And today, the discovery that we are doing in South Bank, 5,700 meters, and the North Bank discoveries, 4,600 meters. That's what is the pursuit of hydrocarbon. And I must tell you to the audiences whom I am connecting through this audio-visual sequence of yours, there are huge possibilities and opportunities lying there. The only thing is we need to dive more deeper, and we will continue to do so.
So I'm going to come to the Oil India landscape in a moment. But before that, what made you go back to the South Bank of Brahmaputra or go there in the first place here?
The idea was when Government of India brought in a reform under HELP, Hydrocarbon Exploration Licensing Policy, which was a change from NELP, New Exploration Licensing Policy. NELP was primarily a production sharing contract. HELP was something called a revenue sharing contract, where the operator or the explorer were having the option to choose large areas and then offer the bid. So having explored extensively in the South Bank, it was very but natural that we must explore the North Bank. So we acquired large areas under the OLP campaign. That's why I keep telling that the flagship reform of the current dispensation in terms of OLP has opened up, and possibly this will be one such find in the North Bank.
This segment was supported by the India Energy Week 2025, scheduled from February 11th to 14th in New Delhi, and you can register for the same using the link in the show notes. Global air traffic rises. 2024 has officially overtaken 2019 in air traffic and thus above pre-pandemic levels. The International Air Transport Association, or IATA, has released 2024 full year and December 2024 passenger market performance, showing record high demand. Total full year traffic for 24 rose about 10% compared to 23, and this is about 4% above the pre-pandemic, that's the 2019 levels. IATA also said that December 24 was a strong finish to the year, with overall demand rising 8.6 or close to 9% year-on-year, while capacity grew around 5.6%. The December load factor had reached 84%, a record for the month. Now, whether this trend, that is the annual trend, will continue in 25, given the general upheaval and trade wars and slowing of some economies, including India, is of course something that we have to see. India gets set for its own AI model. India's IT Minister Ashwini Vaishnaw on Thursday said that DeepSeek, the popular Chinese open source AI model, will soon be hosted on Indian servers. The decision, he said, aims to address data privacy concerns and enhance India's AI capabilities, according to Money Control. He said hosting open source models within the country would help ensure better data security and compliance with Indian regulations. His remarks, interestingly, come at a time when several Western nations, including the US, have raised national security concerns over DeepSeek and its Chinese origin. The minister also highlighted the role of the India AI Compute Facility, which has secured about 18,000 GPUs to support the development of a large language model, or LLM, tailored to India's needs. He also spoke about the affordability of the AI Compute Facility, saying that it would be one of the most cost-effective globally. He noted that the cost would be significantly less than $1 per unit, with the government bearing the expenses. He also said that India's large language model, LLM, is expected to be ready within the next 10 months, and emphasized India's AI capabilities by comparing India's infrastructure to global benchmarks. DeepSeek AI was trained on 2,000 GPUs, ChatGPT on 25,000 GPUs, and we now have 15,000 high-end GPUs available. India has a robust compute facility that will support our ambitions, CNBC TV 18 quoted him as saying. The German economy is slowing. The German economy shrank by about 0.2% quarter on quarter in the 3 months ended in December, according to preliminary data released by Germany's statistics office Destatis on Thursday. Analysts polled by Reuters had been expecting GDP to decline by 0.1%. Household and government consumption expenditure increased, but exports were significantly lower than in the previous year, the agency said. Germany's economic performance has long been sluggish, with quarterly GDP readings mostly around the flat line in the last 2 years, though it has managed to avoid a technical recession. 2025 could be better, though, the government has forecasted. Above average temperatures coming up. India could see above average temperatures in February, with several wheat and rapeseed growing states likely to see maximum temperatures up to 5 degrees Celsius above average on some days, which could affect crops, according to Weather Bureau sources who spoke to Reuters. India is the world's second biggest wheat producer and is hoping for a bumper harvest in 2025 to avoid costly imports. In 2022, India had seen sharp sudden rises in temperatures in February and March, which affected the wheat crop, thus forcing a ban on exports. High temperatures during the grain formation stage, as it is called, could reduce yields for the fourth straight year, trimming overall production and forcing authorities also to lower or remove a 40% import tax to facilitate imports to tide over shortages, according to Reuters. And finally, before we go, it's Friday, so it's also time for some feedback. And we've got some great feedback, so let me pick a few. SP Singh and Shri Balaji Sampath say, very educative and thank you for your insights. Mohanish Chitnis says the first 5.57 minutes were excellent, cutting through the clutter and noise. This is with reference to the episode on AI, or rather DeepSeek AI, and that was a fun episode to do as well. And I'd also like to thank Hariharan and Anil KR for contributing through donations and support to our effort, which you can do via YouTube. So Hariharan and Anil, thank you so much. Really appreciate this, and this does go a long way. So thank you very much. And we do have a special edition for the Union Budget coming up on Sunday morning, and we'll of course resume on Monday with our regular programming. Thanks and bye. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.